Drop it.
Welcome back, my passive income investors alike, to the terrorizing mental debate of what's better, dividend or growth stocks, to getting you to your financial independence journey that much quicker. Because if you grew up like I did, listening to people like Kevin O'Leary jamming that idea down your throat that if stocks don't pay dividends or companies don't cash flow, they're risky, they're terrible, they're speculative, you're gambling. And this philosophy is very controversial amongst the YouTube community, especially with people like PPC and people like Financial Education, and trying to find the best of both worlds. Because I mean, if you listen to these guys long enough, you're going to hear them slip up from their regular philosophies, like, you know, PPC and trading Bitcoin, which blew my mind.
It's my belief that basically Bitcoin is the aggregate market cap within the next 2 years, it's probably going to hit about $1 trillion range.
And same thing with Jeremy, who would rather focus on the stocks he's trading, because there's nothing really fun about talking about stocks you're never selling or trading, and you're kind of holding on to them forever. But that in itself is even a debate. But I'm going to share with you the ins and outs. I'm not a financial advisor. This is just stuff I've learned building a 150K portfolio. I'm going to share with you a lot of personal information as well, so consider slapping a like. But we're going to deep dive into this, starting with, you need to sit the heck down and make a plan, guys. Nobody gets anywhere in life without making a plan. And I'm talking about your financial independence date. If you ask somebody that gets into the stock market what their financial retirement date is, they usually don't have this figured out, and it makes it very hard to get to where you need to go, because most people aren't thinking more than a day trader. They're not thinking more than a day ahead of where they're at. You need to be looking 10, 15, maybe even 20 years out from where you're currently sitting. And it's just as simple as taking a compound calculator, figuring how much money you make, if the market's average a 10% return, times that out over whatever it's going to take you to get to the money that's going to be required to live off of comfortably. Could take a little longer, could take a little faster, and we're going to take a look at that right now based off your income. So this is the biggest factor, in my opinion, depending on whether you're going to be focusing on heavy growth or heavy dividend stocks, is purely your income, guys. Are you making more than $100,000 a year? You making less than $100,000 a year like I am? Well, chances are, if you're making over 100K and you're frugal like I am, and you're capable of saving 50% of your income, let's just do the quick math. Well, 50 grand a year times 10 years, there's $500,000 over a 10-year term at the compound rate of the average market. You're going to be sitting on 800,000. Heck, if you do real well at these current market conditions, maybe even $1 million in a decade, which if you invest at a dividend stock at 5%, well, look at that. You're making 50K a year. Can you live on that comfortably? Chances are, if you did it for the last decade, putting that 50% away, you could easily retire on that. So, I mean, that could get you retired in your 30s. My personal financial freedom date is going to be around 35, and that is based off trying to get a higher than average rate of return, because I have personally, only off my working income, I've never made more than about 40 to 50,000 a year. Heck, last year I only made 30 grand. And if I'm only putting away 10 or $20,000 a year, guys, I mean, over 10 years, that's only 100 grand, maybe 200 if I'm lucky. And that's just not going to get me to where I want to be over the next decade. So what I've done is I've focused on growth, not just growth, but I have heavily focused on growth stocks in the past. I own Tesla, many of you know, but the problem that you're going to find with growth stocks is getting in and out of them, because this is where the real debate comes in. You're not only going to have to figure out how to get in and out of them at the right prices, you're also going to have to do a lot more homework to make sure you're just not throwing money at something that's going to abolish over the next 5 or 10 years, because it could be detrimental if you're primarily focusing on these growth stocks. But the big difference between these two is growth stocks can double within 1 to 5 years. Heck, they could even go up 5 or 10x in 1 to 5 years. We saw it with companies that I used to trade like Canopy Growth Corp. We just saw it happen with Tesla, and the biggest problem that I ran into with that stock was figuring out how to get out of it at the right price. I sold a quarter of my shares at $700 after it doubled, and then I sold another quarter at roughly around $800 after it peaked at $950 and came down. So I did not time that very well, and heck, where it sits today, it could pop back up. So I mean, trying to figure that out can be hard to stomach in and of itself. Whereas with dividend stocks, you're not going to be doubling it real fast. Your basic banks, your basic utilities, usually your basic stocks don't double that fast. You're usually looking at a rate of return of 5 to 10 years where you might see 100% return. But at least along the way, you're getting that cash flow. But the problem is if you don't make a lot of money and you're primarily focused on cash flow, you're not going to get to where you want to be as fast as you probably could, taking on some risk. Now, you can find the best of both worlds, because heaven forbid you buy something like an Apple or a Microsoft like I have. Those two companies have doubled last year pretty much alone, and I've been collecting a little tiny paycheck, which I'm lucky to be able to reinvest. But these two big debates, I really think, comes from finding a balance of your personal income. So I currently have exposure of about 30% to growth stocks. These would be like my Teslas, my Microsofts, and I actually just bought another one, but I'm not going to share that with you right now. Stick around until Friday's video or tomorrow where I break down my whole portfolio. Or if you want to hear about it, you know, join our private chat group. I actually talk about this stuff almost bi-hourly, and all those profits I took out of Tesla, I redistributed into another company, which I'm going to share with you all real soon. But taking a deeper look here, what about a crash? What happens if the market crashes? This is where things get a lot more trickier, ladies and gentlemen, because in this situation, if you only hold growth stocks, you're going to get crushed. Growth stocks do not do well in recessions. And the problem too here is everyone talks about a crash and they talk about it very broadly. And the problem with talking about a broad crash is it's just like real estate, in my opinion. Sure, things might be high flying if you look at the overall, you know, S&P 500, but if you actually deep dive into the nooks and crannies of the market, there's always a deal. I can name a bunch right now. Look at Carnival Cruise. I'm not a personal fan of it, but in my opinion, it is on one heck of a discount. There's always a deal, even before there's a recession or a crash. You don't have to wait for this to find a deal. Heck, look at Carnival Cruise right now because of the coronavirus, everything going on with that company, it's down like 30, 40%, pays a 5% dividend yield, and the balance sheet is phenomenal. I'm not a big fan of it because I don't like those kind of stocks, but I see a deal in it nonetheless. But those are the kind of companies that you might find a little bit more risk in. Heaven forbid there's a recession. But on the other spectrum, you're going to look at these ride or die stocks. We're talking about your Johnson & Johnsons, your bank stocks that have survived recessions. These are the companies where you're going to keep getting those paychecks, that cash flow. You're not going to really be worried about the next recession, other than you're going to be taking your high income and continuing to cost average in over that time. So in this perspective is where you're going to find, and in these current market conditions, guys, people have really kind of got exuberated about how much the markets have gone up. So we haven't really experienced a recession, and if we do, I think it's going to be worse than it usually is. I'm not saying a recession is coming. I invest either way because I don't like to care about the current market conditions. I like just buying individual companies I can do my homework on. So don't get too caught up in that. Now, the next big mistake that all of these guys make, in my personal opinion, is they don't look beyond the stock market. The best thing is if you can learn how the stock market works, heck, if you can learn how real estate works, you can do them vice versa.
Okay? But don't put stocks unless you're gambling. Make sure. If you fuck with stocks, it's like gambling. It's the highest level of gambling there is in life. I have done it. I've day traded for like 2 months straight.
I've seen you stress,
and those
too.
2 months, I think I got 3 nights sleep over that crazy shit.
The problem is most people that buy dividend stocks look at real estate like it's a joke. It's non-diversified. You could put that money into a safer company that has more exposure, whereas real estate people look at the stock market as gambling. It's risky. With the real estate, I can hold it. It's solid. And they kind of have this debate going on all the time. But really, if you do one, you can quite easily do the other, and kind of hindering yourself from that knowledge of, you know, knowing that there's capabilities out there could make you miss out on some massive, massive gains. And I'm not even just talking about real estate here. Heck, I dabble in online businesses. I've started multiple businesses. I work for myself. And when you get into this aspect of it, let's say you start a YouTube channel, a Shopify store, and within a year, you're able to make $200, $300, maybe even $500 a month. To put that in perspective, you would need to have $100,000 invested to make a 5% yield off a bank. Because the idea is we want to be able to retire off the cash flow. So, I mean, if you could do that on YouTube or any of these platforms, I mean, you pretty much already invested what it would take to make 100 grand. So I want to keep that in mind going forward, because if you can gauge this out and you've done well with this, I mean, start experimenting with other things you love outside of the stock market. Because the thing that people don't understand, and this is why Kevin O'Leary and people like Warren Buffett get so rich, is if you can personally buy and own a company that's cash flowing $500 to $1,000 a month, chances are that company has an underlying asset value just like real estate does. And if you got it evaluated, who knows, maybe it could be worth $50,000, maybe even $100,000. Mind you, you're not going to really do that with YouTube, but you can definitely do that with Amazon, Shopify, a business that you're personally managing. You can definitely do that with real estate. Heck, you can even start doing Airbnbs for people outside of owning their real estate. And you could start a company off just helping people, you know, do daily rentals of their properties. And you could make that a business and even sell it in and of itself. So if you get caught up in all of this, you should try and get caught up in some of this as well. But start slow, because none of this happens really fast. Whew. Wow, ladies and gentlemen, that was a lot to verbal diarrhea out all over you guys. But this isn't a one size fits-all shoe. And I would love to know your own personal investment strategy, especially if you have something working for you amazingly. Let me know in that description box below, because you can share it with me, the community, so we can all kind of learn off each other. That's the entire point. Stick around for my Friday videos, because that's where I'm going to update my personal six-figure portfolio, showing you those brand new stocks that I bought, which again, guys, if you want to see them today, just simply join our chat group. It's a one price fee. You're in there for life, and you can kind of share almost by hourly. I literally chat by hourly in there. But amongst all of that, what an incredible video, guys. So stay cool, stay awesome. I look forward to chatting to you real soon.